What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Pete Vanderveen. How you doing today, Pete?
Doing good, brother.
Awesome.
Glad to be here.
Great, great. I'm excited to be here today too because my very favorite audience member is here today. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators, investors, and operators. And why do I do that? Well, part of it is because it's the law. And so you have to know where your overlap is with your peers, people in your circle, all that kind of fun stuff. So I have them on so I find out what exactly are you up to, what are you looking for, and all that kind of stuff. But before we get too excited on that, Pete, can you please introduce yourself a little bit for the audience?
Yeah, my name is Pete Vanderveen. I'm a father of two. I have a sophomore daughter and a seventh grade son, married 16 years. So that's kind of my pride and joy. I'm an entrepreneur at heart. So I've founded over a dozen companies. Most recently, I ran a Fortune 5 uh, energy company in Houston, Texas. So I was managing around a $12 billion portfolio. But to me, it doesn't really matter what the flavor of business is. For me, it's always about empowering human capital, building teams, making the most out of opportunities, helping people scale and grow effectively, and then finding success along the way.
All right, that's a beautiful answer. So the first question I have, though, it's actually a prep question, and I need to hit this and I need to do that. It's but wait, check your eight. It's your eight on, but in the screen there, it's your five. It's under here. Pete, can you see the people in the audience? Can you see if their button is red or gray? Under here, the subscribe button, because it should be gray. Can you make that out
It's
from there?
great.
Oh, it's
I see it. It's great.
that, that's awesome news. Great. So now we can continue since that's on there. We'll go through the five different motivations that I found are distinct among commercial real estate investors because we got to know why are people going to stay in this? Why are they making these acquisitions? So the first motivation I found is some people are looking to preserve their purchasing power. That means they've already got the portfolio and cash flow to make ends meet, but maybe they need to buy another asset, make another acquisition. They use the assets they already have to make those acquisitions. And the reason why they do it is because they're staving off inflation. That's not what I'm up to, but that is a perfectly good reason for making more acquisitions. What I'm up to is trading time directly for wealth. And the reason why this came to be so important for me is because I got a background in technology, which makes me a high earner. So I've owned a CRM agency since 2011. And the problem with making high wage, high salary is that you're paying more tax than anybody else. So it hits me that, well, why don't I pivot and find a way to increase my net worth in return for my effort rather than just getting cash and then paying half of it to the government. But some people go into commercial real estate because they're trying to fast track their retirement or leave the door open for it, quite frankly. And what they're looking to do is they're looking to take control of their schedule. Maybe they want to work fewer months per year or fewer weeks per month. Who knows what it is, but that's really what they're up to. Whereas the next two groups, they're just all about hustle. They're going to keep hustling into their 90s, like the people who want to buy their entire hometown. Those are the ones that are looking for that generational wealth, make sure that their great grandchildren never have to hold down a day job. That's what they're really up to. So they're going to hustle to their 90s, just like the last group. They've found maybe a sector society, or maybe it's the environment, or maybe it's animals, maybe they want to send people to space. But regardless, if you want to make a big impact on society, there's a financial component that has to be buttoned up if that's really going to happen. So people make commercial real estate acquisitions. So Pete, of those five different motivations, what combination of those describes you best? Which ones would you say are you?
I think you trade money for time.
Mm-hmm. Yep, you're really
Yeah.
looking, yeah, getting that equity multiple going for you. That's awesome. Awesome. So that brings me to the next question. This is the one I think is a little bit more difficult. It's the tolerance for risk assessment. It's a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. What's too risky for you, Pete?
I think risky is anything that I have no control of the outcome, which obviously would be the 401k stocks. Those are, and even crypto. I think those are challenging asset classes these days because unless you're Warren Buffett and you're riding this train for 60, 80 years, your chances of winning are as good as they are on Las Vegas Boulevard.
Yep, I completely agree. I completely agree. And that brings us to the actual real commercial real estate bits, which are the rolls. And for that I use the Dan Does Deals commercial roll die. You can get your own one at dandoesdeals.com. It's free. I don't even ask for your email address, which is a stupid idea. Okay, you should always, 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 always ask for that email address. But the reason I do it is because I want you to go there. I want you to print it out. I want you to get used to the 6 different major roles, and I want you to be able to effectively communicate on the subject of commercial real estate because your involvement in this business is going to depend on it. So let's go through the 6 different roles so that you can see how my guest fits into these commercial deals. First role is the repositioner. They're looking at a bunch of different properties because they're an acquisitions role. But what are they doing with all that paperwork? Well, if you're in acquisitions, you're talking to sellers. So the first thing they need to do, it's called underwriting. That's the fancy word. And it means doing the arithmetic. They're figuring out, hey, wait a second, is this property even making as much money as this seller claims it is? And then the reason they do that then is they're looking for upside. So they're saying, how can I make this property make more money than it is right now? And they have 3 main tools in their tool belt to find that upside. One is more advantageous lending from their financiers being people who only deal with money and paper. So if you got better financiers, better lending terms, then you've got upside. But usually that's, a different sort of thing that has to do with being more established. So the repositioner's main tool then would be going and making the operations more efficient by stopping those Benjamins from going down the toilet. But of course, there's more than unclogging toilets and collecting rent, mowing lawns, taking out trash in operations. There's also a marketing component, which is one of my strengths. The marketing component is keeping the vacancy rate low. There's also some automations that I do as part of my programming background and whatnot. So that's what I'm up to. But the operations part, it's probably not enough to really find enough upside for the repositioner. So often they'll have to get a contractor team to make the units nicer. They'll do a value add or a renovation. And the idea is that the next tenant will be happier to pay more money than the previous one. So that's the upside. But if the repositioner is like me and has the same problem of, see, I'm from the internet, so that means I need boots on the ground. I need a local, okay? You need somebody who can
Right.
be there in an hour or two because that's not going to be me. I'd still be at the airport. So that's more or less the team that owns the place, but the financier, they're also a part owner. And when you turn around to a financier, let's say you say, hey, you got this 300 unit apartment complex under contract, and you turn around to the financiers and say, hey, I got this property under contract. It's worth tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you can lend me, do you? Well, the financier is going to have one other question on their mind that I haven't addressed, which is, who's your sponsor? Who's your KP? Now, a lot of coaching programs, they kind of gloss over this part. And what that's all about is, see, if you want to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. So you're going to have somebody who already owns a 300 unit apartment complex if you want to take down a 300 unit apartment complex with a loan. There are a couple other things that you need. One is you need a certain amount of liquidity, and then you also need a balance sheet among the GP team of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So, Pete, with you, where do you fit into those deals? What's your core competencies that you generally contribute?
Oh, that's a great question. And I think honestly, I'm kind of the guy that oversees all of those 6 variables because in our teams, we've got people that are designated in marketing, designated in underwriting, designated in asset management. But a lot of problem with a lot of teams that fail to scale. And I think real estate industry is just prone for silo culture. Like a lot of people grow up in the real estate industry, keeping things close to their chest because it's my deal, my money. Don't take it, don't swipe it. So what I do with our team is I try to oversee what everyone's doing to make sure that there's synergies, that there's collaboration, that there's teamwork, but that everyone understands what each other is doing so that everyone is staying in their lane, so that optimization. So I've done every one of those channels myself, but I think my biggest value add to my team is to really help everyone stay in their lane, stay focused on what they're doing, because the guy in capital raising is frustrated because marketing is just a big abyss. And he's like, I don't know how to figure this out. I don't know what I'm doing. I don't even know what they're doing. They're a mess. So what happens is now you get people that are frustrated because the other parties aren't walking in step. So for me, it's like helping everyone, making sure that they are optimized, that everyone's efficient. We don't have duplicity, but we also don't have gaps, because if we want to scale and we have gaps, or we want to scale and we have a broken foundation of a solid operating team, we're not going to scale.
I love that. I love that. Now, this is where I get to turn around to the audience and let the cat out of the bag, which is I know your focus on build to rent right now. That's a huge part, and so that also is another factor compared to most of my guests. They're just plain old multifamily, and they're not doing ground up construction, so that makes a difference. But this next section, I always go for what is the buy box, and so just so you're clear on what I'm talking about, when commercial investors are talking to each other and say, hey, what sort of property is easier to say yes to and it's more difficult to say no to? We call it a buy box or an ideal property. And we're really asking about three main things. First one's geography. So where is it? What states, what county, possibly even what neighborhood? That all matters to investors. The second one, it has to do with the size of the deal. And in multifamily, that goes off a unit count is how they describe that. How many units? Because there's a big difference between companies that focus on 5, 10 units or whatever and 500 units. Okay. It's just a completely different game. So the unit count absolutely matters. The third thing is called class. And one of my least favorite things in any language is when they use one word to mean the two separate things, especially if they're closely related. And that's what they do with class. The first meaning, it has to do with the condition of the building. So is it old and beat up? Is it
Right.
up to date but not very fancy? Or is it brand new and totally lavish? That's one definition of class. And then the other definition, it has to do with where the property is located. So what's the crime rate like? What are the school districts like? And both of those two definitions of class, they use the same rating system, which is just like in grade school. So it'll be like C minus or B plus or an A or whatever. So Pete, like again, you're doing build to rent. So that is a little bit of a difference right there. But what kind of properties are in your buy box, or what are you putting together here with the build to rent operations?
Yeah, we're doing all new construction. We're based in the Southeast, so we're trying to focus on markets that are traditionally prone for migration. So obviously, we got a lot of people leaving high cost kind of blue states, moving to more red, low cost states. So we've got a lot of the boomers, people that are looking, even the middle income families that are just looking to have a better quality of life. So the Southeast, kind of from Texas to Florida, and then kind of that Southeast corner, that's our focus. But so we're doing all kind of that 900 to 1200 square foot built to rent home these are micro homes in a condensed high density community. You still get the aesthetics of a single family community. You got the parks, you got the backyards, you got the front street in front of your home, but everything's condensed. So for us, that's advantageous because we maximize obviously we focus on opportunity zones, we focus on maximum capital depreciation. We're starting with a new asset class. We're not dealing with someone else's depleted assets. And we control all the variables, and we create a community that we can control from A to Z, and we get to maximize the lifespan. We get to maximize the input and the investment and the value adds. But we also get to create cultures. We get to create communities that we control how we treat people and how we invest into these people.
That's beautiful. That's beautiful. I love that. So the next question then has to do with who you're eager to help. And of course, if you're doing ground up construction, that's very capital intensive. So like that's going to be, so it's going to be different financiers you're going to be looking for. But just so that you're aware, because of the multifaceted nature of multifamily and commercial real estate, everybody has their own skill set, but it also means we're disproportionately suited to help some people more than others. Me, with my marketing and tech background, I'm always on the lookout for more sponsors and KPs because they've got the foundation to actually, for me to be the fuel to the fire instead of just another grunt, which is what most people need when they first start off. So Pete, I usually mention that you're not allowed to entice investors for 506B. I'm not sure exactly what you got on the go for that, but who are you disproportionately prepared to help in commercial real estate?
I think we've got over 400 units in the pipeline, so we've got around 150 million in development. So for us, capital's the constraint. We have a strong team, but of course, the faster we want to grow, the more capital we need, the more capital raisers that we need to participate. But we're also looking for capital raisers that aren't just looking to Shark Tank their way into a big slice of the pie. We want participants. We want people that have the same goal to make the world a better place and bless people along the way.
Beautiful. And if they want to do that, they want to reach out. Me personally, LinkedIn is a great way to get a hold of me. We met through Andy and Ruben and all that kind of stuff. I met them through meetups, which I also found through LinkedIn. But as far as the best way to reach you, Pete, how do they do that?
Yeah, by all means, I'm multifaceted on LinkedIn. I do a lot of different things, but find me on LinkedIn. Also, obviously I'm part of legacyacquisitions.com. So you can reach me at pete@legacyacquisitions.com or text me anytime. My number is 808-276-0017. And I got the QR code up above there. So you can reach me any which way.
All right, beautiful. And the only thing that I have left is actually not for you, which is it's under my QR code. Once again, there better not be a red button there because
No red button.
I've heard stories where like people look at that awful red button and their eyes they're just like you don't want that for yourself. So make sure you click it, turn it into the gray button because of its magical power. Its magical power is it means that YouTube might actually start paying for these videos instead of me, which is that's better, right? And it costs you nothing. All it really means is that these videos might show up on your list of suggestions, but you don't have to pay attention to those. You can just completely ignore them. I just appreciate the fact that you spent this time with me, just like Pete. I am really appreciative that you joined me today. It's been great getting to know you a little bit better.
Much love, brother.
Awesome. Thank you.
506 BB, everyone.
Oh.
Get in this code.
Oh, yeah, cool. Yeah, I'm on 506 BME. Okay, so how do I just open up my QR code and then I just scan it?
Yeah.
Like that?
Yeah.
Okay, and then what?
And then you do the instructions.
Oh, I just log in right here.
Yeah.
Oh, and here's your video right here. Okay.
Yeah.
And so this is enough for compliance, huh?
Mm-hmm.
Cool. So this proves that I know who you are and all that stuff?
Yeah.
Cool. I think everybody should 506B me.
Or you.
Awesome. Thanks. I'll see you around.